Hi everyone, my name is Adam Cohen, and I'm the GM of Payoneer's enterprise business. I have been with the company for 5 years. It's my pleasure to be here with you today and open the Beyond Conference for Enterprise. In this short session, we'll discuss the growth of online payments industry and the key drivers that led to its growth. We'll see that some of these key drivers, namely the consumers, sellers, and platforms, also create new opportunities which require complex financial solutions to capture. It's no secret that online payments are booming. As e-commerce is growing and more consumers purchase online, it is quite amazing to see the continued year-over-year growth trends for an industry that is already that big. This data is taken from a BCG analysis. On the left, you can see the point of sale projected growth rates, and on the right, the staggering growth rates for online commerce or e-commerce. With a 10% CAGR, e-commerce is definitely the place to be as a payments company. Capital markets are already factoring in some of the forecasted growth and valuing fintech and online payments companies on par with some of the leading financial institutions globally. In this group of selected leading banks and fintech players, 6 out of 12 are fintech players. Shopify is, of course, an e-commerce platform, not a fintech or a payments company per se. But I included it here as its business model is based on payments, as we'll see in this presentation. By the way, Alipay's and Stripe's data are based on estimations, as they are private companies. The growth of e-commerce is, of course, the key driver in the growth of online payments. But what are the drivers behind the growth of e-commerce? Consumers are naturally a key factor. As we become as a society more comfortable with online purchasing, e-commerce grows. As we'll see, platforms and marketplaces play a huge and increasing role in the online industry. Sellers are an important ingredient too. Without the entrepreneurship of online sellers, platforms and marketplaces won't have much to offer. I won't spend much time on service providers, banks, and financial institutions, but their role is crucial too. Service providers such as logistic and fulfillment companies, advertising tools for sellers, and other service providers play a crucial role in the industry. In fact, they play such an important role that Payoneer has integrated with dozens of them around the world to streamline processes and facilitate payments for its customers. The same is true for banks, e-wallets, and PSPs. They provide the e-commerce industry with access to rails and customers both locally and globally. For this reason, Payoneer has partnered with more than 100 banks, e-wallets, and PSPs to provide better services to its customers. In the next slides, I will share more details about the key participants in the e-commerce ecosystem, the consumers, the sellers, and the platforms. Let's start with consumers. In 2019, e-commerce had a penetration rate of 11 to 16%, depending on which categories were included in the analysis. That penetration rate took decades to build, and the last decade has seen an increase of 8 to 10%. Due to COVID in 2020, we've seen an increase of 4 to 10%, depending again on the data source. This means that a few weeks in 2020 have produced similar gains in the e-commerce penetration rate as the entire decade before it. It happened, of course, because consumers were locked at home and started to buy more online more frequently. It was also driven by new online consumers who were buying online for the very first time. And it's truly a global phenomenon. In Latin America, Visa mentioned in the middle of the year that they've seen an increase of 13 million new online consumers in just a few weeks. In Thailand, weekly downloads of shopping apps jumped by 60% according to App Annie, as the country declared a state of emergency after a week of lockdown. In Australia, the Easter long weekend saw a 135% year-over-year growth in online sales. That was Australia's biggest ever online sales day in history, period, larger than Black Friday or Cyber Monday. Past experience tells us that these changes in consumer behavior are likely to outlast the pandemic itself and have therefore changed the growth trajectory of online payments for good. Let's talk a bit about the sellers. The sales of goods online, sometimes referred to as e-commerce, is booming. Yet online commerce is more than just e-commerce. Other verticals such as travel, the gig economy, social platforms, e-learning, music royalties, and others are also growing double or triple digit year over year. The same is true for markets. We're seeing tremendous growth around the world, and particularly in APAC. China is a huge piece of this story, of course, but other markets such as Vietnam, the Philippines, Bangladesh, Pakistan, and India are also growing very rapidly. Online commerce and marketplaces have democratized opportunities for people around the world. If you have talent, a skill, and initiative, you can now build your own business online and sell to buyers and consumers all around the world. This is a boon for all of us, but especially to entrepreneurs in emerging economies. It is so inspiring to work with these entrepreneurs, and we at Payoneer are humbled by the opportunity to help them build and grow their businesses. And indeed, new entrepreneurs keep joining the digital and the platform economy every day. There are also interesting trends of existing businesses changing their business model and joining or changing the digital economy. We're seeing B2B businesses, such as manufacturers and traders, starting to sell directly to consumers through marketplaces and platforms. So B2B businesses operating as B2B2C sellers. Another trend is that experienced and successful marketplace sellers aim to diversify their business and become more independent by building their own brand. Many of them will use e-commerce platforms to create their online stores. In other words, these are B2B2C sellers developing a B2C business model. And then there's also a trend which might seem to go in the opposite direction, where B2B2C sellers develop a B2B business. This somewhat counterintuitive trend is led by successful marketplace sellers, mainly in Greater China, who have created platforms which open their own supply chain capabilities to third-party sellers. They realize that their supply chain capabilities are unique and could be leveraged by great marketeers, primarily from target markets such as the US and Europe, that want to transform their own marketing or affiliate business into an e-commerce business. These trends represent opportunities for platforms too. And we're seeing marketplaces creating onboarding programs for B2B sellers and e-commerce platforms targeting marketplace sellers who may want to build their own stores or develop a supply chain platform that could benefit the platform's ecosystem. This might be a good segue to zoom in on the platform side. Marketplaces and e-commerce platforms are such a fascinating and compelling phenomenon. This is surely the age of the platform. Marketplaces benefit from structural advantages. These stem from the fact that they don't own the inventory, they don't need to innovate at the product level, they don't need to own many of what a typical retailer would. So we're seeing marketplaces share in the e-commerce growing year over year and estimated to be around 60% today. We're seeing marketplaces being created in new verticals such as social platforms, e-learning, music royalties, B2B, and more. We're also seeing a rise in verticalized solutions within specific sectors. For example, more curated services marketplaces or service marketplaces dedicated to the specific need of a specific sector. We all know that Amazon killed it in e-commerce, right? But to what extent? We can again analyze how public markets value companies as an indicator for their future success. You can see that Amazon is valued at $1.5 trillion. That's a gigantic valuation. But it's interesting to see that Amazon is valued more than the sum valuation of all the 13 great companies and brands on the right. These include top retailers across various categories, including food and beverage, home improvements, clothing, and pharma, such as Walmart, Home Depot, Costco, Sears, and Target. Retailers are obviously looking anxiously at how marketplaces become the new leaders in retail, and as a consequence are pushing to develop their own marketplaces. Marketplaces represent a different business model, and there are many issues to be solved in seller onboarding, providing sellers with the tools to manage their online store, seller risk management, logistics, and fulfillment services to enable on-time delivery, and more and more. It's a different business, usually managed separately. Some retailers have been very successful in making this move, while others not so much. Cross-border sellers represent a huge opportunity and challenge for these retailers. They provide a more direct access to global manufacturing and supply chain hubs like China and Vietnam, yet managing cross-border sellers' risk and quality is tricky too. We'll cover this in a separate discussion in this conference. Marketplaces require a different setup than retailers, of course, as they need to manage the supply side differently. Their third-party sellers sell directly to consumers and buyers, while the marketplace has less control over the inventory. E-commerce platforms like Shopify require yet another different setup, as typically they are not the merchant of record. The sellers on their platforms are sub-merchants, and the platforms require a payment facilitation solution, or PayFac. Some of the media platforms also have shown interest in payments for various reasons. One reason is to protect their advertising business from Amazon, whose share in advertising grows steadily as more and more consumers start their buying journey on Amazon's website or app. Media platforms get to decide whether they want to become the merchant of record and develop a full-fledged marketplace, or do they want to avoid this responsibility and liability and use the PayFac or payment facilitation model. ISVs also get an opportunity to offer financial services to their users in a trend dubbed embedded finance. Some of them aim to develop their own payments ecosystem. For example, accounting software that lets customers accept payments from clients on top of invoicing them. B2C payments are a different thing, and some ISVs aim to capture these flows too. Shopify is an example of a successful platform whose business model is driven, maybe even dominated, by payments and payments-related services. Shopify's business is comprised of a subscription business driven by their SaaS platform and a merchant solutions business, which consists primarily of payments acceptance services. As you can see in the table, Merchant Solutions is responsible for nearly 60% of Shopify's revenues in 2019 and over 40% of the gross profit contribution. And these shares are growing fast. Shopify recorded a staggering 480% growth rate in the profit contribution of Merchant Solutions in just 4 years. This growth rate is about double that of the subscription business growth. So it's likely to expect that payments acceptance and payments-related services will play an even greater role in Shopify's future, and probably in the future of competing e-commerce platforms. So what is it that marketplaces and platforms aim to accomplish through financial services and payments? Payments can have a major impact on buyer experience through offering a better selection of payment methods and seller quality management. By onboarding new sellers to their platforms and opening new markets for their goods and services, marketplaces can grow their supply and demand and grow their overall GMV. Financial services for sellers are a powerful tool to drive seller growth. For example, by providing sellers with more capital to expand their business. Risk is obviously a key driver, with some marketplaces reporting a loss of more than 2% of the revenues on chargebacks alone. When one factors in the loss of buyers' loyalty and damage to their brand, the cost can be much higher. Some marketplaces have chosen to build full-fledged payments, treasury, and finance teams, as well as their own payments platforms. Over time, this proves to be a problematic strategy due to the need to continuously invest in the platform, the OpEx costs, especially during an economic downturn such as today's. Relying more on vendors such as Payoneer proves to be a more resilient and flexible approach over time and helps reduce costs and investments. The introduction of PSD2 in Europe has set the standard for other jurisdictions around the world, like it did with data protection in GDPR. So we're experiencing similar directives outside of the EU and expect this trend to continue. While marketplaces can choose to become a regulated company, this entails high costs and complexity for them. Using a PSP such as Payoneer can help alleviate this regulatory burden. Payoneer offers a one-stop shop end-to-end solution for marketplaces. Our legacy product is the mass payment service. Well, we are happy to say that we offer the best geographical coverage in the world, as well as very flexible implementation models. We offer more than 30 funding currencies and local settlement in 150 countries. Payments may be made to Payoneer's branded account and card solutions, or directly to the payee's bank account. Payoneer has been and continues to be a clear leader in this space. Seller services is another area where Payoneer is a clear leader. We have a unique offering for marketplace sellers that we developed over the years by working closely with millions of SMBs and micro businesses around the world. We pride ourselves in being good listeners and believe that we have a really good understanding of sellers' needs. The Payoneer solution enables sellers to get paid from multiple sources, hold and convert currencies. It also offers SMBs to spend their funds through a Payoneer prepaid card by withdrawing the funds to their bank account or to a local e-wallet, pay their VAT obligations, and pay their team members or suppliers in or outside the Payoneer network. Through our recent acquisition of Optile, we now offer an advanced payment gateway and orchestration solution, enabling marketplaces and platforms to easily work with and optimize multiple PSPs. Some of our competitors aim to provide a rigid end-to-end solution that marketplaces have to use. We don't think that this is the future of payments. We believe in merchant and marketplace-centric solutions where we facilitate our client to create the best setup for their needs. We also help marketplaces and platforms accept payments. We have launched our own merchant services business based on the Optile acquisition. We can also help merchants accept B2B payments and settle funds from the multiple acquirers. This creates opportunities in enabling and monetizing FX flows, which we're happy to assist through our FX services. These include payee FX services, FX trading solutions, and FX lock and hedging services. In terms of sellers' risk management, we help marketplaces KYC their sellers globally. It's a unique capability that virtually none of our competitors have at this scale. This helps marketplaces comply with AML and regulatory requirements. But even more than that, it's the cornerstone of understanding the true identity of their sellers. We then help marketplaces identify and eliminate bad actors, eliminating up to 70% of fraud on their platform. Payoneer Connect provides marketplaces with a way to tap into Payoneer's economy of 4 million SMBs and micro businesses around the world. Whether you're looking for experienced certified sellers to sell on your platform or new digital businesses to buy on your platform, Payoneer can help. And last but not least, working capital is a powerful tool to help sellers grow on your platform. Payoneer built its own working capital service where we do the underwriting, manage risks, and finance the program. We offer various products to cater to the needs of different types of sellers. That's it. This is what I have for you today, everybody. Thanks for listening in, and I'm hoping that you found this content useful. I'm looking forward to being in touch with you. Please don't hesitate to email me to adamco@payoneer.com or connect with me on LinkedIn. I hope that you enjoy the rest of this conference. Bye for now.